Ever pondered why some unit trust investments don't yield the expected returns? Often this confusion arises from common misconceptions surrounding these investments. Today we're going to debunk some of these myths and set the record straight. Firstly, a prevalent myth is that lower-priced units are better investments. It's tempting to think that the lower the price, the higher the potential for returns. However, this is not necessarily true. The price of a unit doesn't determine its potential. Instead, it's the performance of the investments within the trust that matters. Next, there's a myth that newer unit trusts always outperform older ones. While it's true that some new trusts may bring innovative strategies to the table, it's not a guarantee of superior performance. The performance of a unit trust depends on factors such as the quality of its assets and the skill of the fund manager. Then there's the misconception that smaller unit trusts are superior to larger ones. This myth stems from the belief that smaller trusts are more flexible and can adapt quickly to market changes. While this might be true in some cases, it's not a hard and fast rule. Larger trusts often have access to more resources and can offer more diversification, which can lead to better risk management. Another common myth is that higher dividends indicate better performance. While dividends can be a sign of a trust's profitability, they shouldn't be the sole indicator of its performance. Other factors, such as the trust's total return and its consistency, are equally important. Lastly, some people believe that buying units just before dividends is beneficial. This strategy, known as dividend stripping, might seem logical at first glance. However, it often leads to disappointment. The price of a unit typically drops by the same amount as the dividend payout, so there's no real gain from this strategy. So what's the truth about unit trust investments? It's that there's no one-size-fits-all strategy. Successful investing depends on understanding the market conditions, diversifying your investments, and seeking knowledge to discern between sound advice and misleading information. To sum up, avoid falling for the myths that lower-priced units are better investments. Newer trusts always outperform older ones. Smaller trusts are superior to larger ones. Higher dividends indicate better performance, and buying units just before dividends is beneficial. Instead, focus on understanding the performance of the trust based on market conditions and diversification. Remember, in the world of unit trust investments, knowledge is power. So, keep learning, keep investing, and keep growing your wealth.